Financial seems to be the running theme in this week's Growth and Income Stock Picks. Todd Bunton is going to tell us more about it. And I say that because you've got a couple of financial companies here.
I do.
Back-to-back Ameriprise Financial, that's even in the name.
Yeah, right.
AMP, they're financial advisors?
Yeah, they have a network of over 9,700 financial advisors that provide really all types of planning for people. You've got the traditional wealth planning model, but they also have a pretty extensive insurance arm.
Oh.
And wealth management, and they offer annuities, really kind of all types of financial products. They actually spun off from American Express, I think back in 2005. But yeah, one of the largest personal financial advising companies in the U.S. And if you take a look, there's a lot to like about this company. They've delivered 3 consecutive positive earnings surprises, very solid earnings momentum. We've seen analysts raise their estimates off the last earnings beat, sent it to a Zacks rank of 2, which is a buy rating. And if you look at consensus estimates, analysts expect 18% earnings per share growth from this company this year, 16% growth next year. So you've got a good growth story here, and I think a lot of that is tied to the financial markets. Obviously, the stock market's done very well over the last couple of years, and that's getting people more interested in the market. And if you think about it, too, the demographics of this country are very favorable to the financial planning industry in general, and Ameriprise stands to benefit from that. I like to quote the stat that 10,000 people turn 65 every day in this country, so people are always looking for retirement solutions. So good industry headwind or tailwinds here, I should say. And along with the growth story, you got a dividend that yields 2.5%. And if you take a look at their chart, they've increased that dividend at a 24% compound annual rate going back to 2006. So very shareholder friendly here. They just increased their dividend by a solid amount after the first quarter results. And you can see even during the financial crisis, they held their dividend fairly steady. They didn't cut it like a lot of other financial services companies. So good growth here, good income, and you get all that at a reasonable price. They trade at just 11 times 12-month forward earnings. The industry median is 13 times, so it's a discount to that. This is a strong total return potential candidate for 2013, I think.
All right, the other one is Citi Holding, which is a bank holding company.
Yes, yep, and people out in West Virginia, Ohio, I think they have some branches in Kentucky might know them as City National Bank.
Oh. They
have 83 branches there, so they're still a fairly small a bank company, but very solid, very well run. If you look, the company's delivered 5 consecutive positive earnings surprises, so good earnings momentum, which is what we like to talk about here. And I think they have very solid industry tailwinds too. If you think about it, the long end of the yield curve has been rising. Obviously, that's been the story of the last month, is rising interest rates. Well, who benefits from that? It's banks, because I've talked about this before. Banks will lend money at the longer end of the yield curve, and they'll pay out on deposits on the shorter end. So when that yield curve steepens like it has, the net interest margin of banks widens, and that's definitely going to benefit a company like City National. And if you look, their loan growth has been very solid. The credit quality has been improving. So a lot going right here. Finally, after several years of terrible banking environment, things are starting to turn around. And I think you got to look. You still have to be choosy. And if you look, this company is very solid. And like I said, you've got the 5 consecutive positive earnings surprises. No surprise here that analysts have been raising their estimates over the last several quarters, sent it to a Zacks rank of 2, which is a buy rating. So good earnings momentum, very solid income story. They pay a dividend that yields 3.6%. And I took a chart of their last 10 years of dividends, and you can see they as well kept their dividend steady throughout the financial crisis, very well run. And if you look over the last 10 years, they've increased their dividend at a compound annual rate of 6%. So very shareholder friendly here. You've got some solid income to go along with the growth, and all that at a very reasonable price as well. They trade at 1.7 times tangible book value. The historical median for it is 2.1 times, so it's a discount to that. Could be strong total return potential here as well.
Okay, do you own either one?
I do not.
Check out other stock picks. You can find them on our website, Zacks.com. You can link to them right off the homepage. Check back often because they change often. With Todd, I'm Terry Ruffalo.